Okay, Sunday, December 18, 2016. And we're going to look at the bullish percent. Okay, now what this is they take the underlying issues in a sector, and if their point and figure pattern is in a bullish phase, it's added to this. So here, looking at the Dow Jones Transportation, these are weekly. These are hike and ashy bars, so it's not so because things trend. Okay, you have we're down here 10% in the beginning of the year. 10% of the transports were in a bullish phase. 90%. We're at 90. We're up at 90% again with some wicks on here. I noticed that the rails have been rolling over. Airlines too. I also noticed that I mentioned Priceline, and then hotels were kind of spiky last week, and so we're having issues there. I don't believe it's oil related, but there may be some things getting a little soft here. Some things are seasonal, like they move, oil and grains and things of that nature. But here on the transports, you can see areas. What I'm looking for is areas where they're basically oversold. If I'm leaning, bullish underlying in the marketplace, kind of like the Dow theory type of deal, where you have the utilities, industrials, and the transports all kind of pointed in the same direction. 2015, I looked at truckers in that because I thought as oil prices come down, that would be beneficial for truckers. And basically this year, the transports finally jumped on board the bandwagon. But they're at the 90 level, okay? So all that means is that 90% of the stocks are in a bullish phase, okay? Doesn't mean they can't get to 100%, but you can see what happens when it got to 100%. What I look for is I have these sorted, from one extreme to the other, and at the other extreme, of course, is the gold miners that are down, I think, around 10% or so. Okay, so what I'm looking for is, if I think a reason that the transports are being oversold, this is when I come in and look for things. Now we're up in here. They've moved, so I'd be a little cautious on the transports, okay? Let's see here. Then I have here, this is the industrial side of things. You can see that it's in the upper area, okay, of the bullish phase. It doesn't mean that they're going to turn. It just means that they're all pointed in one direction, okay? So here you have about 90% of them pointing in the upper direction. Industrials, like I said, the stronger dollar, they're going to have issues with selling products overseas unless they manufacture overseas. Offshoring kind of thing. At the beginning of the year, the industrials were at 16%. This is Brexit, okay. Down here was China, and things of that nature. So here they are at the upper end, so the industrials. So it's one of those that you break it down and then watch them individually to see if you're beginning to see signs of waning. This goes back to 2011, where that was another low down here at 5. Energy sector, basically it poked its nose up, and then we had some reversal action going on here. Okay, so basically you're looking for extremes. Here's 97 in 2012, 95, 94. So the oil energy sector, they may have right now run their course. Here's from the beginning of the year, only 2% of them were in a bull phase. So what I'm looking for is, 1, 2, 3, 4, 5, 6, 7 times that they were, over the last 5, 6 years, that they were, oversold, and then here's the basically overbought. It's kind of how, they're all in this phase, and then here's a, at best it's a pause. But oil's at 54, so it's either going to break 54 and go to 62, or that'll be it for now. It's still holding up there. Oil's holding up there. but I'm noticing that commercials are beginning to sell into this rally. Financials, as you can see, financials as a whole were higher in the past. Okay, this is the beginning of the year. This is Brexit, and this was basically the low in interest rates the other way. One would ascertain or assume that they will eventually get back up into this area as rates go higher. The short-term problem is that we've seen new housing numbers fall off a cliff. It is seasonally adjusted, but you have where you're not going to get as many refis in that. Everybody has a payment, so homes are going to have to be built smaller, or something's going to have to give, that type of thing. Maybe teaser rates again. Why not, right? Hey, no money down, But that worked well for the belly curve of the population, the boomers. Unfortunately, lots of stories there. People you talk to. This one couple, they bought a duplex, and I snuck in one side of it just because I like the view. I've moved like a dozen times in this town. Being on the side of a mountain does not work for Kevin here. This town, every home is supposed to have a view of the lake. You might have to be on your roof, but it works. At one time, they buried all the phone poles. We don't have street lights, so we get a lot of stars. But I liked the view at the time. And their businesses, personal businesses, were falling apart, but they were getting in the real estate market. And so I told them, I said, look, this isn't going to end pretty. Nobody wants to hear that, of course, but it's just my opinion. And it was, they got in right at the top. So you're back to the financials. This has room to run is basically what I'm saying. So anything I'm buying on weakness on financials, we are getting some pullback off of the banks in that. Technology sector, that's how these are robots and automation and things of that nature. They are buried. They haven't really been oversold for a while. Beginning of the year, they were oversold, but they're kind of buried up in here. So this is a persistent trend. But a move like this, and then, it's kind of losing its momentum here. So I'd be a little cautious in the technology side. That's how I'd kind of look at it. S&P 100, like I said, these are the larger cap stocks. They're going to be most susceptible to the stronger dollar. And they're also their interest rates, things of that nature too. And let's see, S&P 100 and NASDAQ 100, same thing, having a tough go at it here. They're poking their nose through the NASDAQ 100, but they just, there's still more to the upside here, for them to turn, but only three-quarters. They're breaking out to a new high, and only, three-quarters of them are on the bandwagon. So it's basically we're back to the larger priced ones, are the ones that are moving the market here. Beginning of the year was a low. Brexit was a low. That's kind of how I look at it. They're not oversold. So it's kind of, you get a divergence here. The Toronto kind of whippy here. They have difficulty, one side you have oil, and then the flip side you have mining and lumber and things of that nature. So, they had the run up from the beginning of the year with commodities, but this long spike, just a few of them are turning over. They've had only a few opportunities to buy over the last few years. This was a toppy action here with commodities coming out. This is oil coming off of 100. S&P 500, once again, we talked about the money flow and things where people aren't willing to commit into the S&P. 70% of them are pointing. That means 30% aren't in a bullish phase. So that gets to be a drag. You can see where there are, opportunities here. For me, I'm looking for, some sort of intermediate top where we trade sideways to lower. But we're at that end phase here where things get kind of frothy, like I mentioned in the other video that, we had the put call ratio. It doesn't mean that it's going to trade sideways, or it doesn't mean it's going to turn lower, but with sideways, this is still pointing, but you have the same thing again where you're making new highs and fewer issues are joining in. So it's kind of weaker legs type of deal. The New York Stock Exchange, that one, like Friday, I pointed out the pink dots chart that kind of, we spiked to a new high, but yet, or not to, the number of issues you're not getting enough issues to go along with it here. You could have your tipping point at say like 50, half the issues are up versus down kind of thing. You can see a few times in the buy. That's what I'm looking for. Because like I said, I think the stock market's going to double. But it's one of those where, we're dealing with some macro issues and now politics on top of it. Dow Jones Industrials bullish. So there's 30 of them in here. 3/4 of them, they're, the Dow makes a new high, but yet only it's a price weighted index. So the higher priced issues, United Health, United Health, some of the higher price issues, Travelers, they're the ones that help pump this. But here only, 2/3 of them are going in the right direction. And it's making a new high. You can see, I see the lows here. So in my case, what I'd be looking for is if we do roll over here, I'm looking for some extreme lows here to when they go back in and buy. But for me, it's the small cap stuff, the growth, because it's gonna have issues. Those were the ones that moved when the dollar was stronger in the late 90s. Materials sector, same type of deal. It's not at the, it basically stalled right when interest rates troughed. And then we rolled over, and we're basically getting a bounce here. Same type of deal. They're going to have issues with exports. With the strong dollar, we're going to import. No matter what POTUS says, we're going to import. That's how if it's cheaper, overseas to buy the finished good than to make it here. That's what we're going to end up doing. We cycle through that through the 80s. The dollar was really strong. We got a lot of imports, from Japan, made in Japan to, then we had made in China, and I'm seeing more, Bangladesh, India. What was it? My applesauce was from Poland. My cookies were from Italy. My something was from Sweden. My chocolates from Switzerland. The strong dollar is beginning to, show up, which is fine. Hey, it's if I buy from Poland, Poland might buy, Coca-Colas, Pepsis, Doritos, that kind of thing. That's how it works, people. Free trade. NASDAQ composite, same type of deal. It's poking its head through here. But even at the bestest times through here, you had, 72% of the stocks. So the NASDAQ has always been a little soft, but one would ascertain that eventually at the end of all of this, the NASDAQ, just like it did before, and the Russell, it will, it'll be pretty frothy. We can see here, even if you go back and look, you had a couple of times in 2011 and then the beginning of this year where there was a decent buying opportunity, in a bull market. This, I don't have a bear market on it, so I can't really, I'll go back to take a look at how this behaved during a bear market. But, for right now, I'm leaning, overall for the next, decade bullish, but, discretionary. These are, things that, we think about cruise line, should I buy a car? Should I go on a cruise, that kind of thing. And it's been kind of wishy-washy here too. higher interest rates, dealing with credit, things of that nature. Something's going to have to give, right? State. Okay, so here was consumer staples. I chucked this one out on stock twits. I think it was XLP. There was shorts. I was leaning short side of this one here because staples, your Doritos and Coca-Cola, Budweiser, things that people buy all the time, cigarettes, whatever. That's right. As we all know, if somebody only has $20 left, they buy booze and cigarettes. Gotta love psychology class. But these are staples. So staples are out of favor because they're defensives when markets go and turn frothy. These are your Johnson & Johnson and things of that nature. So when it got down to here, I said to cover your short and try and push this one. And this one could also flow into, if the market does roll over, that they move back into staples. Utilities heavily oversold, which has me to lean towards, like I was talking about the debt. If you can get guaranteed on one and skip the capital losses on another. But the utilities were oversold here the first time in a very long time. People hide out in utilities and collect a dividend here. But you can see as they ran all the way up and, central banks were taking debt out of the marketplace. You had nowhere to run to, so they ran into utilities, and of course that set the top up and it just cratered afterwards. Healthcare, that's another, type of deal that was, we had frothiness on here and then basically rolled over. Occasionally they'll run into that as a safety type deal too. You have to put your money somewhere. I mean, how do we all run into T-bills then after stocks are falling and bonds are falling? You go to cash. Cash is the last thing people jump into. And if you find yourself in cash and can't seem to find anything, you are probably the leader on this here. That's what it is. You go to cash and you just wait for it to just collapse and then you get back in. But that's how it goes. Is if the market's up, everybody's long until they're not. And healthcare, you have your LAB, DU, and D. Those are tough. For me, I'm looking for the extremes. And we're past that. So that's a lot of chop in my book. Yes, you have your baby boomers and things of that nature, but a lot of that stuff did get priced in. And then here's the other one too. The man taketh away. You start taking away insurance and stuff. Who's going to pay for this? Healthcare. We're back to the states and the counties. Hey, look, if you're only being paid this much, you're going to try and charge them that much. If your health insurance is more than your mortgage payment, for your family. I mean, there's, people need to be humbled. It's kind of like how much you need. What was it? The rule of thumb is 25% of your income. So if a household, what's an average household? What is it? Like 75,000. I'm not sure offhand. I think it's 75,000. So 25% of that. That's the most you can pay for, your mortgage. Now you start getting up to a third. And I think I read an article that some places in Florida are 54%. So which that means if one person loses their job, they're out the door. But markets self-correct. They, someone will, cities will pop up anywhere. Central Park. Hey, let's, you don't like it? Well, then don't cause it. That's how I look at it. But that's here nor there. It's interesting times. Telecom. This one is thin, of course, because of there are only a few players in this, but they were mashed up pretty hard here. I noticed that some media companies took it on the chin. But like communications, this would probably be one where like Staples, who's going to give up their cell phone. They cut their landline, they cut their cable. If you're down to one car, you can live with one cell phone, right? You can Skype the person coming home. That's Skype's what, $8.95 or something, $6.95. There's, whatever. It's just how it goes. It's a market. And then your gold. Okay, so here's the beginning of the year. So the gold miners and stuff were more frothy here than at the top of the metal. I don't show it. Oh yeah, I do. We're up in here. So they were more frothy. So that's like I said, that has me to believe that we're like in a wave 4. But short term, we're down to, I thought Friday they kind of puked it up a little bit here. Nice reversal in platinum we saw in the last video. So, but usually what I do is then run one against the other. Take this one. Let's see if I can copy that. Copy. And go back to the beginning. So I take what would be the strongest, the transports. It's kind of like would you get out of transports to go into gold? But that's how I kind of look at things. And the blarney. Oh, I see what I did. Okay, come on, copy the whole thing. All right, that'll work. Okay, so this gives me, if you buy transportations and buy gold. Okay, put on to daily. So, here on a daily basis, if you bought the transportations and sold gold, it took off. Okay, so you basically, it's kind of like looking at extremes here. You get the bounce back up to the halfway mark. All right, so it's one of those that, if it, once it's up in here, it's kind of you take the extremes. You pit one against, the strongest becomes the weakest, that kind of thing. So it'd be like the transports versus gold kind of thing. But it's one of those, it does nothing, and it takes off. And you buy one and sell the other, kind of like a pairs trade, or this is a ratio, and just look for, just to see if there's some shift. There's no correlation between transports and gold, but it gives you one of those where you can kind of see if there's, opportunities in there. Okie dokie. There you go. That was the bullish percents.